Boom 500 is one of my favorite pairs to trade, especially when I'm trading indices. Boom 500 and Crash 500, those are my two favorite pairs. And in this strategy, I'm going to be sharing with you Boom 500 strategy, but it also works for both the 500 series, right? So whatever works here, most of the times also applies to Crash 500. So it's so like a two-in-one strategy. But I've broken this strategy, right, into 5 steps that if 5 easy steps that we can follow in order to maximize our profits when you are trading Boom 500, right? So today I'm just going to be showing you Boom 500, and if I still have time, I'm going to show you how we also look at Crash 500 so that you understand that these are just the same concepts. I prefer Boom 500 over the 300 and the 1000 series. Why? Because the 1000 series, firstly, it has very, personally I trade ticks most of the times, right? But for the 1000 series, they've got large spikes. Of course, they give ticks that last for a long time, but if one spike catches you, I'm sorry, guys. I think everyone here knows what happens if spikes on Boom 1000 catch you, right? It's just one spike and is enough to take you back home, take you back to your roots, right? So that's why I like Boom 500. And the 300 series is very volatile. It's too volatile, right? So I don't like it that much, right? But though it's better, right? So after the 500 series, I like the 300 series. And the 1000 series, I don't usually even trade it most of the times. As you can see, most of the times I don't even post strategies on those, right? So I've broken this video into 5 steps that we're going to follow, right? So firstly, what do we have to do, like for the first steps, we have to look forward for our trend, right? So for your trend, you can check what the 1 hour time frame, right? And then that's where you check what your trend, right? So right over here, we're in a downtrend in this example over here. Do you guys know how to check the trend, right? So if you are in a downtrend, it's characterized by continuously creating a series of what lower lows and what lower highs, lower low and lower highs. That's how we can see that it's a downtrend, right? So as for here, this one is a clear downtrend. If you can see this, then you're probably blind. You better go visit your optician, right? Because if you can see that this is a downtrend, yeah, I don't know. In fact, you should even quit trading if you can see that this was a perfect downtrend, right? So what do you have to do here? So after checking our trend, right, we shift down to the 15-minute time frame to check the trend again, right? So we'll be checking the trend of that time frame alone, right? So right over here, let's just use right here where there was a downtrend, right? So while we check using what the last break of structure, right? So if we are taking this case over here, right? So after this we broke structure here, right? So let's say we're analyzing and we're around this area over here, we consider this a downtrend because the last break of structure was to the downside, right? So we'll only be looking for sell setups, right? And later in the video, I'm also going to show you a simpler way to know your trend without even looking at these breaks of markets, breaks in structure. I think it's around the 4th step, right? So stay tuned and watch till I show you the easier method, the simple indicator that I use in order to get my entries and also show me my trend, right? So is over here, right? So after we've checked our trend, right, I like to, if I'm trading the Boom 500 and Crash 500, in fact any boom and crash, right, except the 1000s, right, I go to the 5-minute time frame, right? That's where I get most of my entries there. And after getting my entries there, is also helps me so that my stop loss will be very small, right? Unlike if I'm trading on the 1 hour time frame, my stop loss will be a little bit larger, right? So I take my entries on the 5-minute time frame because I get more entries, smaller stop loss, and larger TPs because I will be targeting what higher because we are in the downtrend, right? So after checking our trend, right? So what we want to look for is a perfect, right? Is a perfect downtrend, right? So like here, like this case over here, right? So right over here, let me just mark this right over here, right? This was our last structural points, right? So over here, when you break this structure down, right, and we already checked the 1 hour time frame, so we know that we are in a long-term downtrend, right? So after we break this structure here, right, break this previous structure over here, this was the last what higher low that was created, right? So if you break that, it means you are back to the downtrend, right? So after going back to the downtrend, what do you have to look for, right? So the pullback. So my favorite pullback is a pullback that is in a sort of like a consolidating manner, right? So right over here, right, this is sort of like a consolidating manner to me, because it's not continuously spiking like bam bam bam, right? It's continuously, after it's one spike, there's a red candlestick, one spike, red candlestick, one spike, red candlestick. So this is the manner that I want to look for, right? And take note of this, guys. This is a very powerful strategy. This is a very powerful setup. If you see the market failing to continuously spike, right, like what it was doing over here, check this, for example, right? It was just green, 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 right? And here is green, red, red, green, red, red, green, red, 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 right? So this is a slow down in momentum, showing that the market isn't able to push further up, right? So right over here, this is a very powerful indicator that the market isn't able to push to continuously going up. But that's not enough to make us enter the trade, right? So let's check this, for example, right? So there's a breaking market structure over here, right? Over here, right? And there's this pattern, right? It's the same pattern that we are talking about over here, right? But that isn't enough to for you to enter the trade, right? So why? That's what I'm going to be showing you next, right? So after seeing this pullback, right? So when the market is pulling back, we have to mark what our areas of interest, right? Areas that will be sure that if the market pulls back to this area, then I'm looking forward to buy or I'm looking forward to sell, right? Most of the times traders lose money because they don't anticipate. They just feel, they just want to trade with their gut feelings, right? They just feel like, I just feel like I want to buy, I just feel like it's going to buy, I just feel like it's going to sell, or it's already left me, I will miss out, right? So that's you have to avoid the fear of missing out, right? So if you miss out, that's it, right? The market doesn't wait for no one, right? But you also get multiple opportunities later, right? So over here, best is for me, I like to mark my zones on the flip zones, on the zone flips, right? So what is a zone flip? A zone flip is just a, let's say we're in a downtrend, right? So we're continuously going down, right? And they pull back. Of course, the market pulls back. If the market doesn't pull back, we won't get entries, right? So right over here, this is a zone flip. This becomes our flip zone over here, right? When this is a support, right? Because it pushed market a little bit up, right? And when that support gets broken, right, and the market pulls back to it, now most of the times, right, it acts as a resistance and it continues going down. This is one of the most, this over here is one of the most common patterns that you see on boom and crash, and it's one of the most profitable strategies that even if you trade this alone, it's a powerful indicator, it's a powerful strategy, right, that I've already shared with you, right? So over here, how do we look? We want to mark those zones, right? So if I'm not trading flip zones, I'm trading. So like, what do I call them? I don't want to call them order blocks, because if I call them order blocks, most of you will get scared over here, right? So this is just almost essentially one and the same thing to the flip zones, right? So an order block, right? I'm just going to call it order block for the sake of going forward with this video, right? So an order block, what do you have to look for in an order block, right? So we are going down, right? And we have got a pullback, right? And then continue going down, right? So right over here, right, when we are going down, right, there's the last green candle right over here that is formed before we break this structure over here. That is the order block. That's what we mark. That's what I want to mark over here, right? So if my market pulls back, if the market pulls back and it doesn't respect this level over here, most of the times it comes and bounces off that order block and continues going down. So those are my only two opportunities. Those are the only two areas that I'm likely going to enter. I don't enter anyway. I'm not a guru, I'm not a god, right? I don't know how the reef controls the market. So those are my only 2 points. If the market doesn't pull back to those areas, I let the market go. If the market breaks those areas, I don't enter the trade. It's my stop loss, I don't enter, right? But most of the times I wouldn't have entered because there's a downtrend, there's what, so because the market has already broken that structure, right? So right over here, when the market is pulling back, right, I want to mark my zone over here, right? So this is the zone flip, and it's a zone flip at the same time. It's also it's also our order block, right? Because right over here, this is the last green candle before the market broke this structure, right? So this is the last green candle, or if you wanted to consider this one, but this one was already tested by this green candle over here, so I'm not going to be using this one. I want to use a candle that hasn't been tested yet, right? But I think I'll empty I'll empty this more when I'm talking about order blocks. This video I just want to keep it a little bit simple for you guys, right? I'll empty more about order blocks when I create a video on order blocks, right? So this one is a double confluence, right? So after breaking market structure, we know that it's a downtrend. We've got a breaking market structure, we've got a pullback in a consolidating manner, and it tests our zone flip and our order block at the same time, right? So this is actually the best entry that you can get so far, right? And you enter when the what. So as for me, I just don't enter there, right? You can shift to the 15-minute time frame to see if there's a suitable candlestick confirmation over here, right? Because the 5-minute time frame isn't clear on candlesticks, right? Or you can draw a little trend line, right, and enter when the market breaks that trend line, right? All right, that's for our entry confirmation, right? So that was step 3, right? Then now for the easier method that I was telling you about in the beginning of this video, right, we're going to add or let me just look for another example, right, that shows this strategy over here in action, right? So this perfect confluence doesn't come with every time, right, but when you see it, you'll be guaranteed, guys, right? And you can also, for instead of your flip zones or your order blocks, you can also use a test of the broken trend line, right? So a test of the broken trend line, let me see if there's an example over here, right? So let's take this for example over here. Okay, right, we mark this low and connect it to this low, right, over there, right? And now we know that we're in a downtrend already, right? We've got a pullback, right? The pullback is just consolidating. The market isn't able to push up. It's not giving big spikes, right? One big spikes to us to know that the market is continuously going up. We are not going to be looking for buying opportunity, for selling opportunities. But now the market is giving small spikes. This is a consolidating minute for me, right? So when you test that area over here, I enter and I sell, right? So that's what you have to look for. And most of the times, right, the market just gives one candlestick. It just tests with one candlestick, like what it did over here. Let me just mark this, like what it did over here, right? So right over here, it just gives one candlestick. Yeah, these strategies work, right? And you can also use them. As I said, it's one of the most powerful indicators, one of the most powerful strategies, all right? But I'm right over in this video, I want to give you the best, the cream. If you want the icing, the best, right, you have to wait for that pullback with the consolidating manner, right, for more confluence, right? But if you are not interested in further confluence, right, you can ignore that, right, and you can just enter there and then, right? So there's more about that in the, if you want more about more information, just comment in the comment section below with the more information that you want, either it's order blocks or trend lines or flip zones, right? So right now I'm just going to add my moving averages. My moving averages, the ones that I told you that make things simpler for me, right? So that I can use for my trend, and I can also use for my entries, right? So the moving averages that I like to use are the 50, then exponential over here, apply to close, and I like to use black for this one. That's just what I'm used to. Oh, it's too thick. I don't like thick things. Not those things that you're thinking about. Oh yes, such a, yeah, I've got dirty minds, right? So I just change this thickness to 1 pixel, right? Then click done, right? And I also like to use the 200 moving average. 200 is exponential again, right? And I like to use purple. I've just used purple. I don't know why I like to use purple for this one. This isn't purple. I just do for this video, right? It's okay, but I don't know why I like to use purple. Maybe it's maybe just because it's a royal color. I don't know why I just picked purple. That's what I usually like to use, right? So over here, how do you, now we are adding more confluences to our trade so that it becomes the best trade ever, right? So over here, right, let's use this example that we used before, right? So for our trend, how do you know our trend? It's very simple, guys. You just have to look where the candlesticks are, where the moving average is in relative to the candlesticks, right? So if the moving averages are on top of the candlesticks, it's a downtrend. If the moving averages are below the candlesticks, it's a what? It's an uptrend. So if the both of them are above the candlesticks, it's a major downtrend. It's a very good downtrend, right? But what I usually use for my trend is just the 200 moving average, and the 50 moving average I usually use it for my entries, right? And the 200 I also use it for my entries, but I don't want to go much in depth on that, right? But if you'd like me to go much in depth, you can just comment in the comment section below, right? And right over here, right, so we've already confirmed our trend. The moving averages are both on top of the what, are both on top of the candlesticks, right? So right over here, how do we enter? We enter when the market pulls back to this black moving average, right? And when it starts to consolidate or creates an M, right, this is just a further, it's just adding more confluence to that trade, right? So this over here is my sweet spot, right? I would have entered this trade, how do you say it, without any fear, right? If it doesn't work out, that's it. But I know that I have done my best. It's better for you to lose a trade when you know that all your confluences have been met, rather than entering when all your confluences haven't been met, but you just feel like it, right? So it's better to, I will consider it a win because I followed my rules. If you have to follow your rules, your principles, right? Then for the last step, the fifth step for this to make the best booming crash strategy, where will we go without a stop loss, right? So I want you to show you where to place your stop loss when you're using this strategy, right? So your stop loss, it goes right over here, right? So in this example over here, right, we after our mark our order block over here, right, we place our stop loss above that order block, right? If when the candle started to what, to fall down, right, we just place our stop loss above this order block, slightly above. You don't have to keep it too close because the market can just come and test, maybe just want to create so like an M, right? So you put it slightly above, right, so that you give your trade room to what, to play out, right, so that it becomes easier, right, rather than for your stop loss to get hit and you see the market continuously going down and you just be hating, right? So you can use the 50 moving averages, 15 moving average for your entries again, and it actually works wonders, right? Most of the times it actually works wonders, right? So right over here, this pullback over here, I didn't test the 50 moving average, but this one had, but it's not that important, right? So I think that's it for this video. If you've got any questions, leave them in the comment section down below and I'll address them. I think I'm just going to stop this video here because it's now become too long.